Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, July 19th. We had a pretty nice, while it was a grinding type of a day, a pretty nice trend day and on all-time highs today in the S&P. And I thought I would talk about two different strategies that you can use to get on board a day like today. We talked about both of these in our live session today this morning as they were happening. But I thought they were kind of interesting, so I'd share them with the broader list. The One of the keys in the way that I teach trading, and that I've learned that's been very helpful for me is when I stopped thinking first and foremost about a trade setup, in other words, a rule-based trade setup, and I started to think and I changed my perspective to thinking about the context of the market first, knowing that I would find a setup that could fall into place with that context. That's a subtle shift, but it's really an amazingly huge shift. Okay, if so many of us, and we all go down this road, we strive to find this perfect set of indicators and rules. If X and Y and Z happen, then I get into my trade. For whatever reason, it just doesn't quite work as well as we think it should when we draw it up. The reason is almost always because it's not you're taking a trade setup in the wrong market context. So the key is to put the market in context first, tell the story of the market first, and then understand different ways to get on board to take advantage of that context. So, for example, today, obviously we go into the day with an up bias, and that's something we talked about. And at the end of yesterday, the first clue that we wanted to look for was whether or not the market could break above this 59 quarter area. And if it could, that was a pretty bullish indication, and we would expect it to test the all-time high, at least prior to today. And if it could get above there and do so on pretty good aggression, then we would expect it to move higher. Okay, so that's kind of the context that we've got with that. And it actually took place in the overnight session where we got above this pink zone here, and even got above this all-time high again prior to today. What it did is it left a gap up, and so that is a potential scenario for one of the trades that we talk about. And we were talking about this with our members today in the live session, what we call a gap runaway trade. Okay, and so let me talk about the scenarios for that. What you have with a gap is the market either went on sale and you have a really good deal and you can get a gap fill, or conditions changed and the market's taking off and you need to jump on board with that train. That's the question we don't know before it happens, but we do have a few different strategies that we can use to really give ourselves a pretty good edge. In other words, if you just jumped on board every buying gap and you got long every time, you're not going to come out ahead. But if you wait for a very specific set of circumstances, you do have a very good edge. And the type of trade that you can find is that it's more than likely going to be a pretty nice run higher, which is what we had today. So the scenarios that we want to look for with the gap trade, we want to look for number one, what's the big picture bias? Okay, that's the first thing. Number two is the direction of the gap, and number three is the first major aggression bar of the day. Okay, and so if all three of those things line up, you've got a very high chance of a runaway gap. So let's think about that. What is the direction of our gap? It's an up gap. Okay, the market's moved higher. Okay, so that's one thing. Let's see if they line up with the others. What's the big picture bias? It's up. Well, we know going into the day it was a big picture bias. We list this on our daily market assistant. So we have a big picture bias and we have an up gap. So chances are it's probably a pretty good opportunity, but we want to wait for a little bit more confirmation to make sure. And the way that we like to do that is to look for the first major aggression bar of the day. If that's also a buying, what we call level 2 or level 3 buying bar, then you've got a pretty nice scenario and you've got a pretty high edge that this market's going to take off. So again, up bias, up gap, first major aggression bar of the day, it happened to be on the first bar of the day, was a level 2 or strong buying aggression bar. All three of these things are lined up. It's a very specific situation, but when all three of these things are lined up, you've got a really strong chance of a runaway market, and that's exactly what ended up happening. And so, we talked about jumping on board right at the close of that bar, and your stop is very tight. It's right below that bar. If you're wrong, and this is not 100%, but it's about 70-75%. If you're wrong, you get stopped out, and if you're right, it should move up several points. And if you're the type of trader that likes to hold, it's a type of day that can often set up a pretty nice up day for just the rest of the day. So that's one way. That would be the runaway gap trade. Okay. Another one is what we call a rejection or a failure of selling. We have a few different ways to do this, but the logic is very simple. If we know, again, this is where it's not about setup first, it's about context first. So if our context, in this case, it's pretty clear, it doesn't take a rocket scientist to know that this market wants to move higher. But if the context is that this market wants to move higher, one of the best ways you can do that is to wait for a failure or rejection of an attempt by the sellers. Okay, and that's exactly what we had around 10:30 or so Eastern time. We had this level 3 or extreme selling aggression bar. And what it means when we get an extreme bar like this, just like we got this extreme buying bar and it was continuation, when we get an extreme bar, buying or selling, it's either continuation or it's capitulation. It's the end of the road. The way I like to think about this is, if we imagine, again, our big picture bias is up, all things equal, we would rather be on the long side, unless we get some really good selling aggression evidence to show us otherwise. But assuming we want to be on the long side, we know that you can think about this as the current of the river is moving up, okay? So if you are, with the current of the river, you don't need a very powerful motor on your boat. You can just kind of, be on a raft and you're going to move in that direction. However, if you want to go up current, if you want to go against the current, you're going to need a motorboat, and it's going to need a pretty powerful motor depending on how strong the current is. And that's the way I look at it. So in other words, if the current of the river is moving, higher, you need a pretty powerful boat to be able to, with a lot of gas and a lot of energy, to be able to get through that. Okay? So imagine, if you will, that this right here is the seller boat. I know that's a little silly, but I think sometimes these analogies can be helpful. Imagine that's a seller boat, okay? And what happens is they fire up their motors, and they either run out of gas or the motor just, peters out on them, right? What's going to happen if you are trying to go against the current and your motor runs out of gas? Well, you took a shot at it. You don't have enough energy. You didn't attract other sellers, in other words. There's nowhere to go but up, and we're just going to grind higher with the rest of with the current, if that makes sense. Now, there's a couple different ways you can do that. One is more aggressive, one's more conservative. One is what we call more of a capitulation type of a trade, where you have the level 3 bar there, and if we don't get follow through below, and in this case we also got this level 1 buying bar, that's a pretty good place if you're aggressive to just buy it right then and there. And it's not necessarily it's about a 50-50 chance that it works. The beauty of it, though, is that if you're wrong, you lose about 3 or 4 ticks. If you're right, you get something like you had today, right? So that's not bad on a 50-50 coin flip. The other way that's a little more conservative, a higher percentage, is rather than buying it down here, kind of trying to be early, you can wait for the high of this bar to get rejected, which is what happened. We started to trade above it and got comfortable with it up in here. And then when that happens, look for a retracement back to the high of that bar. Should give us a pretty good location to be a buyer. So hopefully that makes sense. Those are just two different ways. There are other ways to get long as well. I don't have the boxes on here right now, but if we talk about boxes, and there was a nice buying box in here that we had a little bit later. Certainly buying at the low of a buying box in an up market is a pretty good scenario. So there are some other ways that we can do it, but I just thought these were two interesting ways to get on board. But again, the whole key, I hope this makes sense, is it's not about the trade setup. There's nothing magical about trade setups. You're not going to find some magic indicator. It's about learning and understanding how to make sense of the story that the market is telling you, and that is what I try to teach. That's what turned it around in my trading, and that's what's I hear day after day about people that feel the same way. So hopefully that made sense. If not, let me know. Let me know any questions you might have, and otherwise we'll talk soon. Thanks so much.